If you've started thinking about debt consolidation, congratulations.
Woo-hoo!
You've already taken the first step to sorting out your finances and feeling more in control. Now that you've got the momentum going, it's important you don't lose steam. It's really easy to put debt consolidation to the back of your mind or the bottom of your to-do list. But the sooner you get through the process, the sooner you'll thank yourself. To help you understand why debt consolidation should be a priority, we've partnered with SocietyOne, a digital lender which has helped thousands of Aussies consolidate their debts over the last decade. SocietyOne's personal loans range from $5,000 to $70,000, with personal rates from as low as 5.45% per annum for borrowers with excellent credit. So, let's get to the crux of it. If you can consolidate multiple debts into one single debt with a lower interest rate, you should do it now rather than later. Why? Because the sooner you do it, the more money you'll save on interest, and the quicker you'll be able to pay your debt off. Let's imagine you've got $20,000 in debt over a few different credit cards. And now you might be paying different rates for each card, but to keep things simple, I'll use the industry average for this example. And according to the Reserve Bank of Australia, that's 19.94% per annum. So, if you had $20,000 of credit card debt and you were paying off $500 per month, it would take you 5.5 years to repay the debt. You'd also end up paying more than $13,000 in interest, and that's before you even factor in fees. On the other hand, if you switch to a personal loan with a lower interest rate, you could be making big savings. Let's say you're eligible for SocietyOne's secured personal loan with a 5.45% per annum comparison rate. Making the same $500 monthly repayments, you'd clear your debt 1 year and 9 months earlier. And you'd only pay $2,100 in interest. That's a saving of $11,000. Plus, because the comparison rate takes fees into account, you don't have to worry about any hidden costs either. All of these calculations were done using Finder's credit card repayment calculator and personal loan calculator. I'll put links in the description so you can play around with it and tailor it to your own situation. Now remember, debt consolidation isn't just about saving time and money. Struggling under debt can also have a huge impact on your mental well-being, and the sooner you can alleviate that, the better. For most people, facing multiple bills every month is far more stressful than just having to think about one. Not only that, but if money does happen to get a little tight one month, it can be stressful and time-consuming to contact multiple lenders about an extension. But if you consolidate your debt into one loan, you'll have fewer bills coming through the door and only one lender to approach if you ever need to delay your repayments. And that's another reason you shouldn't put debt consolidation on the back burner. When your debts become simpler and more manageable, there's less risk of you missing a payment somewhere, which means less chance of incurring late fees and a greater chance of improving your credit score. Remember, you don't have to feel overwhelmed by debt. There are solutions out there that can make everything more manageable. You can also contact the National Debt Helpline at any time. We've dropped the details in the description below. If you want to learn more about getting out of debt and on top of your finances, you can head over to finder.com.au. And don't forget to subscribe for more videos like this.